Welcome, folks. I am Jon Najarian, and this is 3 at 3. We bring you unusual activity that our computers and algorithms and team here at Market Rebellion have found to be unusual to the point where we want to join. We piggyback on those trades, bullish or bearish trades. I will describe each, and we do that throughout the trading day. With that said, let's get started with today's unusual option activity. First, we're going to start with inflation. I saw a tweet out just minutes ago from our team that I was going to be talking about this, and indeed, inflation came in hot, over 9% year over year. That's a big number. Here's one of the breakdowns from the Bureau of Labor Statistics. Gasoline up almost 60%. In fact, that far from 60% year over year from 2021. That's not from the lows. That's this month, last year over now. Food, 10.4%. I think that's an underestimate, but I don't know the full basket that they're using and whether or not it actually reflects what Americans are eating. I think most of us would say the food costs have gone up more than that. Shelter, 5.6%. I also think this is light, not fully reflecting what's really going on. In other words, there's a lot of pain out there, folks. Here's the president. There's Janet Yellen, some of the members of his staff or inner circle. And even though nationwide the average is 467, I think for crude, for gasoline and for diesel, much higher than that, closer to 6. This is what many of us face every day. Down in Puerto Rico, where I live most of the year, gasoline is actually cheaper than where it is most of the United States. In fact, I filled up just 2 days ago for, I think, $1.07 per liter. Now, most of you know a liter is slightly more than a quart, about an ounce and a half more, I think, something like that. I think a liter is 33 point something ounces. So 4 liters is a little more than a gallon by about 4 or more cents, perhaps 4 or more ounces, perhaps 5 ounces. And if you did $1.08 times 2, obviously 216 times 2 again would be 432. So we are paying literally 30 cents a gallon cheaper than the national average. And we're on an island, and we don't refine anything down there. That's coming into Puerto Rico, folks. So, wow, a lot of what you're seeing on screens like the one you're looking at here are really painful to American moms, dads, to individuals that need to use their vehicle to get to work. And if they're lucky enough to be driving an electric vehicle, well, electricity prices have gone up too, but they haven't quite felt the same amount of pain as those of us that drive internal combustion vehicles, whether they're gasoline or diesel. But this is a big deal. And for that reason, the market's traded down very hard this morning. They made a comeback basically in the last 2 hours, and we will keep our eye on it. But folks, this is hot inflation. And when they start taking the core numbers, which they do, of course, all the time, and focus on those versus the headline number, which is gasoline and food, because again, we eat and we need things to come to stores, retail, food stores, anything. And that's usually transported by something that burns fossil fuel. This inflation is running hot, and quite frankly, it's been hot for too long, and I believe we're already in a recession. I've said that time and time again. You need look no further than the 2-year versus the 10-year chart to see how much that's inverted already, which is one of the many things that indicates that we are in a recession as far as the way I look at the world. All right, it's not going to be all negative. We're going to talk about some positive stuff too. I am going to talk about that trade that we did 2 days ago. It's Wednesday of this week. Monday, we saw this unusual activity, 384.79, call it almost 385. was where the SPY was trading. They were buying puts, July 370 put, 76 puts, 376 puts. You can see there the day's range, it traded down to 374.66. So in other words, it was down a full 10 points. So if you're somebody like me, that, and as I said, accurately, I was worried, what if the inflation number doesn't come in hot? Of course, I'm not rooting for inflation, but I have this spread on, which makes me money if we have a hot inflationary number, which we had. So why wouldn't I be rooting for it? Well, a whole host of reasons, but not the least of which is I don't want to be a pig. So I took half off yesterday. I had a 100% profit. I figured that's something that I need to lock in. I'm taking and have taken off 90% of the rest of this. I'll be out of it by the end of the day. We gap down tomorrow. I will not be in this trade. So I'm letting you know that my discipline is when I do see a 100% profit in a trade, I take that profit. And in particular, if I know that there's a market moving potential event out there, like the CPI report at 8:30 Eastern this morning was projected to be, and as it was, I want to get in ahead of that, pull money off the table, and then took the rest of it off today. Wish I had the whole position on today, but I think I did okay anyway. And being disciplined is part of this game, folks. I'll show you the rest of discipline on this next slide. This is Delta Airlines. I talked about it yesterday. I don't shy away from trades when I'm wrong. We saw unusual call activity in Delta. You see it there. The stock was $30.22. They bought the at the money 30 calls, 300,000 share equivalent, because 3,000 calls at 100 per call, 100 shares per call means 300,000 share equivalent. That spread closed yesterday at $1.23. I had the 2.5 point spread on. I owned the 30s. I was short, hands out, short the 32.5s. As you can see on the screen here, I put the previous close, which was 205, the previous close of my shorts, which was 82 cents. That was as of yesterday. Today, as of those prices you see on your screen, it's down to 67 cents. So we are right at that critical level where, do I cut the trade and move on? Well, tell you what I have done. I cut half of this trade, still have half of it on. Why did I do that? It hadn't gone down 50%. John, isn't that your number? Yes, 50% is my number. And I cut losses at 50%. We're not there yet. Why did you cut it? It's a free country, that's why. I decided, you know what? This went down pretty fast today. It was down 5.5%, 6%. It was down 3% in the pre-market. So what did I do? I trimmed this position so that I got out at just slightly higher than where it is here, like 70 cents. It's trading 67 cents right now. If we go down to right around 60 cents, I'll be out. I'll be out of the rest because I'll use my discipline. On the other hand, if it rallies back a little, well, instead of losing, 40% on this trade, if it came back to flat, number one, I'd be happy, but I would basically take the rest of it off because this is July 22nd calls, and both my longs and short are in that same expiration, which means that I will be watching closely and hoping that I can get a recovery out of the trade. But hope is not a strategy. So as we rally, I will be selling out the rest of this position. Rebelcon 2022. This will be going on in Dallas, Texas. Dallas, Texas at Los Colinas, Four Seasons. You want to join us? Got a few seats left where we include the hotel, which we have at a fire sale price because we basically booked out the whole hotel. So if you'd like to join us, by all means, go to marketrebellion.com/get started to learn more about trading, or marketrebellion.com/Dallas to learn more about Rebelcon 2022. Great speakers, fabulous learning activities, 2 days of live trading, barbecue, golf, you name it. We've got a full slate of events for you. You will come away a lot happier about how you can manage your risk and how you can leverage returns in the market like we do. MarketRebellion.com/Dallas. All right, let's take a look at some puts. First of all, EFA. If you followed me for a while, you know that we had EFA at 74. At 74 bucks, strong put buying. Took profits as it traded down. As you can see, basically end of the first quarter, March, we were putting on put spreads in here. We profited from it again and again and again. I think we had 8 separate unusual option activities on the put side between the end of March and now. Well, now it's at 61, down 13 bucks from that 74 level. And 10,000 August 60 puts were purchased today. So that's somebody who believes we're going to see further decline, perhaps because of the rampant inflation overseas. Why? Because I believe EFA is the worldwide index that's everything but the US and Canada. You can check me on that. I think I'm right. And 10,000 of these is a million share equivalent. I want to be on the side of somebody who's swinging a million share stick. So that's the first of today's 3 at 3, and it is indeed a put spread. Bearish puts over here as well. What were these bearish puts in? Well, the FXI. FXI is the large cap in the Chinese stocks, FXI. So it's an ETF that tracks those. You know we had it as it bounced up off the bottom. Maybe it goes back down there. Somebody thinks between now and next Friday, not this Friday, that'll be the 15th, next Friday, between now and next Friday, we might see some strong activity. And if that is indeed the case, well, we will be riding that wave. So FXI, they bought the 31.5 puts just out of the money. You could buy the 32 puts, sell the 30 puts, have a $2 spread on 1-to-1 like that. You got to decide what's appropriate for you. I'm identifying what the unusual activity was. First 2 of our 3 at 3 today, both bearish. Third, bullish, Pfizer. Why not? They probably want us to get 5 and 6 boosters over the next couple of years. Pfizer PFE with the stock just shy of 52, they're buying 5,000 of the August 50 calls. So these are calls that are $2 nearly in the money. In the money meaning if I own those calls and I exercise them today at 50, they're worth at least $1.96 because the right to buy it at 50 when it's trading 51.96 is worth $1.96. That's its intrinsic or in the money value. Then you have extrinsic, the extras that are put on there because of the risk that somebody that sells you those calls has. So this is a bullish trade. 5,000 is 500,000 share equivalent. So it's not a million shares, it's 500,000. So that's about $25 million worth of a stock that they would control with this trade. I like it. I followed it. Let's recap. Bearish FXI, bearish EFA, bullish drug stock, Pfizer. Bang. If you'd like to learn more about how to trade stocks, options, futures, if you'd like to learn all that, if you need a mentor or a coach, we have people who have done that for years, and we have them at MarketRebellion.com. You can access them remotely from your computer, from your iPad, from your smartphone, and or you can come to something like Rebelcon 2022 and see them in person. Go to MarketRebellion.com/Dallas for that Rebelcon again, down in Dallas, September 21st through 24th, or check out MarketRebellion.com/Get Started for the educational side. Thank you, folks, for joining us. I hope you have a great day. I'll be back here tomorrow.